Now, one of the hottest markets out there is the uranium market, and it's one we've been talking about a lot. We're going to be doing some big updates, some very powerful updates that have been happening in the uranium market. You know that I am very excited about this market. It's one that even my mother-in-law has now doubled her portfolio, her retirement portfolio in a very quick time, thanks to uranium itself. And so to discuss the subject is my good friend Justin. He's the creator of Uranium Insider. I always talk about, I encourage everyone to join Uranium Insider. It's the best newsletter out there for uranium stocks, knowing what to buy, sell, understanding the macro environment. I got to say, it's been a big help to managing my mother-in-law's money and helping her increase her retirement portfolio up 100% just very quickly here. And I just want to say one special announcement that Justin's actually going to be increasing the price of Uranium Insider. I am a paying member myself. I think it's cheap as it is. And even with the price raise, it's going to be cheap. But the price raise is going to happen on December 1st. So really soon here, it's going to go up by, I think, $200. We'll have Justin talk about it. But I just want to, let you know that that's happening, and to sign up before that price rise happens, you'll be locked into that rate forever, which is, a nice thing. Nonetheless, it's still going to be real cheap, but this is a really important market. It's a historical market. It's only coming around once in a while. I highly recommend you sign up to Uranium Insider, especially before December 1st. You can lock in your savings on that. The link to it is right there down below in the description and pinned to the comments. You'll see it pinned to the top comment and in the description. So I encourage you to go open up a browser and sign up for that before December 1st. Hit the like button on this video. Give us a comment down below that says "Go Uranium Go" right there down below. And shout out to our sponsor, Vizsla Silver. One of our favorite silver and gold mining stocks is Vizsla Silver. And it's good to see you, Justin.
Hey, it's good to see you too, Jake.
So before we drop into some of the exciting happenings, real quick, I always, whenever I promote uranium in the newsletter, I really am doing it out of, I want to help as many people, because I mean, this has been the uranium market's been a big blessing to me, big blessing to my mother-in-law. And, a lot of subscribers here on the channel, and Uranium Insider newsletters, obviously important component. I tell people all the time I'm a paying member. But real quick, before December 1st, if you want to just let people know what's going on and why they should sign up today.
Yeah, sure. I agree. It's an important market. So yeah, we've grown a lot in the past year, and I've had to hire some staff. I've hired who's now become a really good friend of mine. This gentleman who's a retired hedge fund manager with 30 plus years in the precious metal space. He's helped us to not only with the content of the newsletter, but has helped to structure some really intelligent trades. One of those is a trade that just rolled off today. It was an options trade. This is a vertical bull call spread for one of the large cap companies in the space. We took this trade on in May. The underlying common stock was up about 30% over that time frame, and this options trade was up 127% in this time frame. That just rolled off. That'll be cash showing up in our members' trading accounts on Monday when they wake up. This is the type of thing that we're doing for members, is trying to bring them leverage without a lot of risk with intelligent trades like this. So we've done very well for ourselves, for our members. We're up about 520% since inception. We're up about 150% for the year. We've outperformed the ETFs by 50% this year. And we believe that we can bring this type of value to a larger audience. But we've had to raise those prices, not only to reflect the value that we've been able to return to members in the past couple of years, but also to offset some of the costs of hiring more staff to accommodate the larger membership. And like you mentioned, we're raising the price by $200 on December 1st. And the way that it works is whatever price you sign up at. So if you join now or anytime between now and the 1st, the price that the current membership costs will remain as long as you want to be a member. So if you stay on next year and you want to continue on with the membership, price you pay now locks in for as many years as you want to remain a member of Uranium Insider Pro.
Cool, guys. So I just want to let you know that the price is going to be rising. Obviously, we're always talking about uranium, and I think it's a really important market. So I just wanted to make a little special alert for everyone to sign up for that. Link is in the description and pinned to the comments right there down below. So I encourage you to go down. I am a paying member myself, and check that out. So Justin, give us an update. What's going on in the uranium market? Obviously, there's an infinite amount of macro factors that are happening, from Eric Sprott, the multi-billionaire, and his companies getting involved in the physical market. And we've had all types of amazing things occurring. So give us an up-to-date play-by-play of what's going on.
Sure. Well, I think the most important piece of news that's come across since we last spoke, Jake, is that Kazatomprom had a conference call. And in this conference call, they reiterated that they will not be changing their 2022 budget, which means they are committing to what they had previously guided for 2023 production, which is a continuation of producing at 20% below their subsoil use agreements, which is the level that they're producing at currently. So currently they're producing roughly around 23,500 tons a year. That's just about 59 million pounds. I actually believe that they might miss that production this year and possibly into next year. They also hinted at the fact that they are seeing some supply chain constraints in terms of the raw supplies that they need to build out their wells for their ISR mines, potentially with their lixiviant, which is the sulfuric acid that goes down into the ore body to extract the uranium. They didn't really give a lot of detail on it, but they did kind of they kind of just, if you read the tea leaves based on what they said, which was they are seeing some problems with supply chains. So the basic takeaway from this is that they're not about to come in and revert on their word with their 2023 guidance out through 2023, which means they're not changing their budget for next year, which means they're not going all out drill baby drill to try to ramp up production and sell into this market. And interestingly enough, kind of concurrent with that call was a announcement that they had signed 2 new long-term contract agreements with 2 different Chinese utilities. And without giving the actual details of those agreements, they did say that they are largely market referenced. So what that means is that the sellers of uranium are in the driver's seat, okay? And so they are not about to sell these long-term production contracts that are out, let's say 2025 to 2030, for example, at fixed prices, at only fixed prices. They want exposure to the upside with the spot price of uranium. Now, for the most part, these market-related contracts are going to likely have ceilings, okay? So, for example, and I'm not saying this is what their contract is set at, but for example, they could say this will be 20% fixed at $45 a pound, 80% spot price referenced, which means at the time of delivery, the buyer will pay whatever the spot price is in the market with a ceiling, and whatever that ceiling could be. Maybe it's $70 a pound, maybe it's 80, maybe it's 60. I don't really know. But what they're wanting to do is give some protection to the buyer while leaving a massive amount of upside potential in play for the seller. So wrapping all of that up together from Kazatomprom, basically, to put it into one phrase, they're playing ball. And it's been the bearish concern for essentially ever. Like, what is one thing that can really kill this market? Well, obviously, a nuclear accident could probably be a detriment to this market. Of course, it depends on the sentiment and how that actually would affect demand. And God forbid that happens. The chances of that happening are low. But the other thing is, everyone's always been concerned about Kazatomprom ramping production and flooding the market and killing the price of uranium in order to maintain a certain market share. And all signs point to that not being possible or being their intention. They're playing ball. They want exposure to what they see is going to be happening over the next few years and beyond.
So what do you think is next? We've been kind of in this limbo. We've been talking about it for a while, right? Where all of a sudden you've had Sprott and a lot of these junior uranium mining companies buying a lot of this physical supply. You hear that good news that you just suggested as well. So then what's next? Where do we go from here? Do we need utilities to come to the board in order to significantly move prices? We saw them move up above the 50s, back down, then kind of eke their way back up. Mining stocks have kind of traded sideways, if not a bit down since then. So what's next, do you believe, from here?
Sure, yeah. Well, technically, I mean, if you take a look at the charts and you zoom out a little bit, look at weekly charts, we're really just making a higher low here. And we're going to have corrections down to that 50-day moving average over and over and over and over in the bull market. This is how bull markets work. They take 2 steps forward and 1 step back, and that's exactly what's happening right now. So, honestly, I've been buying pretty heavily, probably the heaviest I've been buying since the dip we had in late September.
And why is that? Why are you buying?
Because the news is overwhelmingly positive. The outlook, even in the short term, is incredibly positive. I do expect a continuation of a seasonal trade. I think we see another strong leg up in uranium between now and January and February. So I'm buying because I'm bullish long term, but I'm also recognizing the opportunity in the short term. So these pullbacks of the 50-day, if I want to increase my exposure for one of my holdings, I'll go ahead and add on these red days. And I'm trying to do as best I can to act in opposite of my emotions, which is what I try to educate folks to do the same. It's very difficult to do. What's next? Well, one thing that's next is that I believe we discussed this in our last interview, Jake, but Sprott is taking over the North Shore Uranium ETF, URNM. They're taking over management of that. That will likely happen in Q1 of next year. Importantly, this ETF will be something that Sprott can market to their, what do they have, a couple 100,000 clients? They will be able to market this product alongside the Sprott Physical Uranium Trust, kind of like a 1-2 punch. And as a kind of a bonus, the Sprott Physical Uranium Trust is a major holding in the URNM ETF. So money flowing into that ETF that will now be marketed by Sprott will actually physically directly lead to purchasing of uranium through the physical trust. So you've got like this triple flywheel happening here. And so that's a big deal. And that likely is going to happen right on the footsteps of a New York Stock Exchange listing for the Sprott Physical Uranium Trust, which we're thinking is more like a Q2, maybe into Q3 story, but possibly Q2.
Now, when you say you've been buying despite your emotions, can you give us some of the intellectual, logical, rational, macro reasons for investing in uranium? Like, let's say someone is listening to this and they still haven't joined Uranium Insider, or they still haven't even bought a uranium share. And maybe either they don't understand it, or maybe they just haven't been that interested in it, or it just hasn't totally hit them yet. What are some of the big macro important things that are on your mind, especially for someone that's listening to this that hasn't bought uranium stock, that isn't in uranium, that, who's really who I'm speaking to right now when I say, hey, look, guys, the price of Uranium Insider is going to go up. You should join. What are some of those things?
Sure. I think that for me, recognizing deeply the strength of the fundamental case for nuclear energy and therefore uranium, when contrasted with a market that is undergoing some profit taking at the moment and reverting back down to rising 50-day moving averages. When you look at the screen and you see red, it triggers an emotional response. I don't care if you're Rick Rule. I don't care if you're somebody that just downloaded the Robinhood app last week and put your first $50 in there. When you see red, you have an emotional response. When you see green, you have an emotional response. I'm sure you experience it the same. Just the overall experience of a given day, regardless of what you're doing, you're hanging out with your family, you're going for a hike, whatever you're doing. If you take a peek at your phone and you see your portfolio is up 7% and everything's green, you feel good, right? And you don't feel good when it's red. And it takes experience and it takes discipline to recognize that when you see red on declining volume, that's really important, by the way. When you see increasing volume on the way up and decreasing volume on the way down, that's telling you that it's not motivated selling. It's the buyers are taking a break and there's a few sellers in the market. That's pretty much what's going on. That's what's happening today, which is why I was buying. So recognizing the short, mid, and long-term opportunities in a weak market is really when I start to get greedy. And that's when I start to get more motivated to purchase more heavily. When I see technical chart patterns that when you zoom out look perfectly healthy, but on the day are bloody, and there's some selling happening with sufficient liquidity that I can add to my holdings. So what is happening besides that, and to answer your previous question, do I think the utilities need to come into the market? For a long-term healthy uranium market and having more term contract interest that can be supportive of the actual producers, yes, it's important. For the short to midterm, in terms of the spot price, it's almost completely irrelevant. The utilities are not really playing in the spot market here, and they're probably not going to. They're probably going to sit out of the spot market. Some of the uncovered ones are going to cover through whatever carry trade might be available, which is diminishing, and or signing some term contracts. But the spot market is really going to be a speculation story for traders and for physical trusts and financial players. And that's really what's on the front burner here. And that's what's going to be driving the story in the short term. Some other pieces that add to my conviction for the fundamental case. I mean, I'll just rapid fire these because I could talk about each one of these for 30 minutes. Japan announcing that they are likely going to have to restart up to 25 to 30 reactors in order to meet their carbon goals. They currently have 11 restarted. China announcing that they are reaffirming their goal of 200 gigawatts by 2035. They're currently at 50 gigawatts. That means another 150 reactors in 15 years. There's 18 under construction in China right now. So that's an unbelievable growth story. And all signs are pointing to that absolutely not reversing, especially when we're seeing Chinese utilities contract with Kazatomprom. We've seen the formation of the ANU physical trust that will be set up in the East that had initial seed funding from Kazatomprom, and the state, essentially the National Bank of Kazakhstan, put the initial $50 million in to seed this new trust. They are going to have a follow-on round, likely in Q1 or Q2 of next year, of $500 million. There is huge appetite in investment for investors in the East to have energy exposure that's not oil and gas, and uranium fits the bill. This is another piece of financially driven demand that is going to be consuming likely uranium coming from the East. Cameco had, it wasn't a conference call, but there was a gentleman from upper management from Cameco. It wasn't Grant or the CEO. It was, I'm forgetting his name, doesn't really matter. He did a call with, I think it was Canaccord. This was a couple of days ago. He essentially is saying they have zero plans to bring McArthur River back online at this point, and they will not bring it back online until they have sufficient term contracts. Now, this is something they've stated since 2018, so this is not really new news. What is really new news is that they continue to hammer their messaging to the utilities and to the market that you are not going to rely on the pounds coming from McArthur River until we get what we want. And what we want is sufficient term contracting to cover the absolute cash bleeding we've undergone for the past 3 years by taking this mine offline, putting it on care and maintenance to the tune of $8 to $10 million per month to keep it on care and maintenance. They're not about to give this stuff away. So they're starting to play hardball, and they're saying, you don't get until we get what we want in terms of our contract book, you can consider that mine on care and maintenance, as long as we need it to be.
Okay, so let's talk about this. There's a lot of people that have seen the price of uranium stocks go up a lot, right? And then people go, well, I already missed the market. So for someone that has not joined Uranium Insider yet, that now maybe they're listening to this interview, and maybe there's some other ones, and they think the macro thesis makes a lot of sense, but they say, I missed it. What's your response to someone that says, I've missed this market. There's no sense in signing up to Uranium Insider, especially before December 1st. And there's other places that make more sense to invest in.
My response is that I believe we're still in the early innings. I think we're probably in the second, maybe the third inning. And these types of, because, well, first of all, where we're at in terms of the valuation of the actual commodity, $46 a pound as of today. That's nowhere near where this is going. You can say, oh yeah, a healthy market needs this to go up to $70, $75 a pound. That's your practical guarantee. This will overshoot, and the equities will go absolutely parabolic when it does. The second reason is it's a very small market. And so when money really flows into this market, these stocks move parabolically. The third thing is valuations. I'm not going to say they don't matter at all, but they essentially don't matter. What happens is when institutional money flows into this sector, there's only a few vehicles that have sufficient liquidity for them to buy. That is the Sprott Physical Uranium Trust and the ETFs. What happens when you buy the ETFs? They buy all their underlying holdings. There isn't a single institutional manager that's going to say, oh, what is the valuation of this Boss Energy that URA is holding? They don't give a damn. They're buying the liquid vehicle in the sector that's going to give them exposure to the sector they want and is going to give them enough liquidity to bail when they need to. They don't care what the valuation of the underlying holdings are. So to position yourself in some of these small mid-cap developing companies that are held by the ETFs, we'll see leverage relative to the overall sector. We'll see leverage relative to the ETFs. That's what we're doing, and we're doing it based on the methodology that we have to pick these companies out of a relatively small basket. We take an even smaller basket. We have 10 holdings since that call spread rolled off today. We have 9 holdings, so we're sitting on a bit of cash now. But to be able to choose those the best winners of those mid-cap companies out of this small basket of companies, 65 publicly traded companies in uranium, and know that the flow of funds is the story, and that is what will move these companies higher. We are still only about $43 billion total market cap for this sector. I believe that's going to go at least to the 150 to 200 billion, if not higher. I'd like to see more companies come into the space. We're hearing some whispers that there's going to be a few more popping up in the next few months. So it's a flow of funds story. And based on inflation, based on supply constraints, based on the energy crises that are happening around the world, based on the flow of funds, I think this market has a huge, huge upside still. And we should see enormous moves still from these stocks in the next, if you want to speculate, let's say 12 to 18 months. If you want to think about it as a longer term market, which is what we do, we think this is still easily a 2 to 3 year trade and very likely a much longer investment.
Now, let's wrap up with what are the best ways to invest it or play it as it pertains to uranium, which of course is a lot more of a unique market than many others, whether it's a gold or silver or what have you. So for someone listening, what's your obviously you're not giving them straightforward financial advice, but as an experienced uranium researcher and investor, what are some important things to keep in mind?
Jurisdiction is very important. It's important to keep in mind management that has actually built a mine before. That's something that we look for. Share structure in a company is extremely, extremely important. And that's something that is very much overlooked by most retail investors. That's something that we look at closely. It's important to recognize what your own personal risk tolerance is and to diversify relative to that risk tolerance. It really depends on your individual investment goals, and your individual risk tolerance is really what it comes down to. So we like to diversify enough to protect ourselves without over diversifying. If you buy 20 positions, you might as well buy the ETFs. We like using options trades to add some leverage with minimal risk. We really like these vertical call spreads. And by the way, we go really into detail, especially in these private members webinars, which we just had our 4th one yesterday. We do these once a month, and we went really deep into the details on how to structure these trades. These vertical call spreads have at least a 2 to 1, usually a 3 to 1 or more risk reward, and so we like to add leverage in that way. But it's just really important to. Okay, so I might have mentioned this in our last interview. I don't recall. I've been doing this podcast, the Uranium Market Minute. I answered a question from a listener that was asking what the exposure to equities is and the leverage in equities relative to the spot price of uranium. So I was like, that's a great question. We all know there's leverage in the miners relative to the metals, right? So I actually did a little research. The bottom of the uranium market in terms of the commodity was late 2016, $18 a pound. Okay. Since then, the spot price of uranium is up a little, about 130%. Cameco is up about 3x. The ETFs are up about 3x. There's some juniors that are only up 3 or 4x. Okay. These are small and mid cap companies that are only up 3 or 4x since 2016. I say only, in traditional investing, making, 200, 300% returns in 5 years is freaking fantastic. But in uranium investors want more, just like, gold and silver investors do. So some of the juniors had 3, 4, 5x since 2016, since the lows. Some of them had 20x. Some of them had almost 100x. So while you can just look blindly and say, oh, that one hasn't moved much in the last couple of years, I'm going to put my money there because it's going to move and catch up with everything else. It's a really unintelligent way to buy a stock. And to just take a shotgun approach is also unintelligent. You might as well just buy the ETF. So if you don't want to join the newsletter, if you don't want to do any work whatsoever, but you just want to throw on a whim, just buy URNM and hope for the best. Okay. Otherwise, you're going to have to do some research to figure out what is going to bring you the best returns. That's the research that we do so far. Like I said, we're outperforming the ETFs by at least 50%. And you got to do the work.
Justin, I hate doing the work. That's why I like uranium.
I understand.
So for everyone listening, price is going up December 1st, $200. Is that what you said, Justin?
Yep.
Going up $200. It's dirt cheap right now. I highly encourage you to sign up. Like I said, my mother-in-law, I'm not sure if I know I've told you that she, I've done well with her portfolio, and I don't only do picks from Uranium Insider, but for the most part, it's follow what you guys are doing. And I just do buy and hold with her. And so when she got divorced, she had, I think 340 grand or something that was put into a Roth IRA with one of those big wealth management companies. And what ended up happening is they put them in their own funds, and she had made like 10% total in like 15 years. And she didn't even know. She just said, yeah, I've got these money with these people. And I was like, well, how much money have they made you? And this, mind you, this was through the entire, huge move in the stock market and tech stocks and all these things. And she, had made, it was 10, 12%, something like that when I went and looked at it. And I said, wow, oh my goodness, not only have you only made this much money in 15 years, basically you've lost money if you factor in the real depurchasing.
Yeah.
And I said, in addition to that, you only own things that they say to own. And I said, sell everything and, let me, rebuy your, reallocate your money, and I put a big chunk to that. And just last week, she's closing in on it. She's getting close to $1 million. And, a lot of that this year has been obviously to the incredible uranium market. And, this is a woman that she's not working anymore. And, it's been life-changing for her. She still hasn't cashed anything out, but just to know now that she doesn't need to worry, and that's why if you're watching these videos and you're like, why does Jake always annoy me by saying, hey, go to the link in the description? The reason I'm doing it is because I really think that this is a life-changing opportunity. I haven't just seen that for myself. I've seen it for my mother-in-law. I was just talking to her today, and she's like, her car broke, and she doesn't have any income. And she said, the fact that I could, she got her car fixed instead of buying a new one. But she said, the fact that I could buy a brand new car when there aren't even cars available makes me feel so good. And, I'm so thankful for this time in history that, you and I, as a retail investor, you listening to this, I'm not talking to Justin, I'm talking to you listening to this. We have an incredible opportunity in time where all this crazy stuff is going on, and we can really increase our purchasing power and do a lot of good things, not only for your own portfolio, but you can really help out a lot of people. And so I'm really grateful for the uranium market. I'm really grateful that I've been able to have you, Justin, come on a lot and educate a lot of people on what's going on. Obviously, I get a lot of comments and people very thankful, but I just wanted to share that whole story about my mother-in-law and why I think this uranium market is so important, and why I encourage you to go sign up for Uranium Insider, especially right now. Save yourself a couple $100. Go use that couple $100 to go, buy some presents for your friends and family this winter, and get yourself to work, or have someone like Justin that can help you along the way, so you can cut out a lot of that work. Like I said jokingly, I don't really like to do the work. And so that's why, these types of newsletters are important when you find the right one. So I'm going to encourage everyone to go to the link in the description right there down below, or pinned to the comments right there down below, and sign up to Uranium Insider right now. Even if you aren't sure if you want to sign up, do yourself a favor and at least open up the web page right now and read everything on the web page right now. This is a unique moment in history, and I want to encourage you to do that. And Justin, I want to pass it back over to you.
Yeah, thanks for sharing that story. That's definitely inspiring. Yeah, I totally agree. I think that the more and more I think about kind of what's going on in the world, and how much these inflating prices of essentially everything are affecting people and affecting myself, it's like you have to be pretty aggressive, I think, and be a pretty active investor these days. I think just putting your money into something passive and not paying attention to it is really stand to lose a lot of purchasing power. Making a few percentage points a year, you're going to be losing incredible amount of money over a long time period. So I think it's important to be active participants in our own savings and our own investments. And so I've really been grateful to have been able to help some folks with this. And we've had really a lot of outreach from our members of gratitude that we've been able to help them make money from their family. I mean, there's been folks that have been laid off due to mandates and that are sending me letters saying, thank you. If it wasn't for this investment, I would have had to do something I didn't want to do to keep my job. There's somebody sent me an email last week. It actually just like really brought me to tears when it hit me. He just said that and he's actually not even a member. He opened up a Robinhood account. He's been watching my videos just to understand the Iranian market better. And I love it. And he was able to buy his kid a putter he's on the golf team, the high school golf team. And he said that they've been able to keep the heat on this winter because of his investments. And it's like, man, I just turned into a ball of tears when that hit me. But I love that we're able to do this together, and you've helped a lot of your listeners and a lot of their investments. And that's what it's all about, man. We got to look out for ourselves. We got to look out for each other, because I don't think that putting our investments into traditional means and hoping for the best is really a wise strategy. And so I'm really glad that we've been able to do this, and hopefully this continues.
Absolutely. So for everyone listening, I encourage you right now, at least just open up the website. It's pinned to the comments as a top comment and in the description, and at least just give it a read. Really exciting times, and I'm very grateful for everything that's happened. I feel like it's just dumb luck that we hit this, the market the way it's had. I mean, even you've done all this research, but it's kind of dumb luck that we've had, you know, Eric Sprott and all these big organizations and all these mining stocks. But this is a unique time in history. And so for you listening to this, I encourage you to check that out in the comments and in the description right there down below. Hit the like button on this video to send it out in the YouTube universe. Subscribe and bell notification to get notified for future episodes. Give us a comment right there down below. This is Go Uranium Go, and we will see you next time.